Mark.
No, I don't know. It couldn't be mine. All right, we are live. Looks like I just figured it out. We don't. Well, we got audio now. So,
That's good.
um, morning, Liam. Thanks
Morning,
everyone
Mark.
if they're still here.
Thanks for being
Um,
patient, everyone.
yes, technology. It could be coconut wireless again. I'm not sure, but Denzel is running late. Also, he's meeting with a contractor right now, so hopefully he's able to jump on. But we do have Liam, who's a agent and investor in the Pittsburgh area. He's part of Jeremy Taggart's team, so a lot of you know Jeremy. But Liam, why don't you quickly introduce yourself real fast, man?
Sure. So I'm based in Pittsburgh. I'm an investor and an agent. Like you said, I work with Jeremy Taggart on the Taggart team, who you've had on a few times before. So been working with him since 2022 full time. He helped me get my first property in 2020. We became friends, convinced me to get my license, started working together, working primarily with investors based in Pittsburgh and kind of all over the place, out of state, some out of country as well. But yeah, bulk of our client base is investors, whether it's burring, flipping, short-term rentals, mid-term rentals, turnkey stuff. That's kind of what we do.
Awesome. Yeah. So this was kind of Denzel's topic he wanted to talk about. So hopefully I gave it to you ahead of time. So maybe we can discuss this before Denzel jumps on. But he wanted to talk about in kind of this environment. Is it better to rent or buy? So did you have any time to get some thoughts on that?
Yeah, I spent a few minutes thinking about it for sure. I mean, like everything else in this business, I think it's very nuanced. Like I don't think there's a correct answer overall over the entire market or the country. I think there's certain markets where certainly it makes more sense to rent nowadays. Where like cost of living over the past several years or decades has been steadily increasing. Same with the prices on, uh, home prices, even insurance prices, all these types of things. So that kind of delta has the difference between renting and owning has changed over time. Um, but I think in certain markets, and depending on what your goals and priorities are, it's still head and shoulders better to be buying. And also, kind of just historically in America, like home ownership has been such a pillar of wealth building for like a good bulk of the country. And I think that's changed. Like I think that's definitely less of the case now. You don't really need home ownership to, build wealth over time, but it is kind of like a forced savings account for a good bulk of the population. So I think it's still very beneficial to do if you can. I think you just have to make more sacrifices and kind of maybe even look at a bit more of an as an investment decision rather than like kind of just a luxury decision. Knows it's like we're going to just buy the house that we want type of thing. But I still think it's better to be buying than renting. Uh, in most cases, it's just less of a given that you're going to get that like the American dream type of thing. It's just changed over time. So it's nuanced. I mean, in Pittsburgh specifically, the numbers say that it's still cheaper to be buying than renting. Uh, there's certain markets where that's not the case, of course, as well.
Yeah, I think that's the one reason why I think Pittsburgh still hasn't quite taken off in a sense because for a lot of people it's still cheaper to buy in a
Hmm.
lot of areas. So I think once that flips and most areas are getting a little bit more expensive. So once that changes, I think that's really when we're going to see this big boom in the renter side for Pittsburgh.
Yeah, I would agree with that. And as the population continues to increase, so like we just went positive on our population growth last year for the first time in a long time. But if that trend continues, then yeah, I definitely agree with you on that.
Yeah, I think that's the one thing a lot of people, if they are looking at the Pittsburgh market, is the population growth or stagnation of that is what's kind of holding them back to really jumping in that market. And you like to keep bringing that up in a lot of the calls. So Liam and Jeremy also attend. Jack usually has a Thursday Western PA surrounding areas call, and Liam and Jeremy hop on when they can, and Liam and Jeremy provide a lot of information and good boots on the ground takes on what to look for and what to look out for. But let's see. I don't. Yeah, Denzel's still not here, so we can still keep like for me. I'm in Hawaii, so I think that for me, it's definitely it makes a lot more sense to rent currently
Hmm.
for the cost of homes. But like you're saying, buying does have a lot of benefits. I think for me, the struggle with people buying homes in Hawaii is a lot of times, they're just looking at the payment and they're not realizing all the additional costs that are involved, like maintenance and
Yeah.
whatnot. So a lot of times they're extending themselves to say, "Oh, I can afford this payment," and then they're really handcuffing themselves to building wealth as far as investing money in other places. So now they have all this money tied up in their home. And I mean, it works. I mean, my parents did it, right? You basically sit on the home for 40 years, and then
Yep.
now you're really,
Forced savings account. Yeah.
yeah. But for a lot of people, I think, they like in today's generation, people are trying to be more mobile, travel, and, not be tied down to one area. I think definitely factoring in all those other costs that can go into home ownership is really more crucial nowadays.
Yeah, there's a lot of phantom costs that go into it with the maintenance stuff, or if your insurance is increasing at some point, uh, you got all the repairs that you got to do. So there is a lot of phantom costs. It's not just the mortgage that you have to pay. So yeah, when you factor that stuff in on the numbers side of things, it's a lot closer than it has been in the past. Which is why I feel like this is a hot topic nowadays, like the renting versus buying thing, which is better, which makes more sense. Um, and there's people who fall on either side. You're right. We have a more transient kind of society now. I think you can work from wherever. Uh, People are kind of optimizing for lifestyle a little bit more, I think. And but also, yeah, like the home ownership thing, it's not just the financials. There is like the emotional side of it too, the kind of safety side of it, where it's like, you have your home and it's a peace of mind thing as well. You can't quantify that, but that is a big piece of this conversation as well.
And I think when we talk about home ownership, I think the big thing too is like we're saying, you got to understand the bigger picture. And Jeremy, who, like you said, helped you get on the investor side, the agent side, but he is what, a seven-time house hacker, I believe.
Number
So,
seven, yeah. He'll never let me
so
forget. Yeah.
yeah, so that is definitely for a lot of people. I think that would be the best way to get into home ownership, if
Yeah.
possible, right?
I agree. I think it's the lowest barrier entry way to get into home ownership, but you get the investment benefits as well. Like you're essentially subsidizing that payment on your house, uh, and you're having a tenant help you pay the loan balance down. You're getting appreciation and all those great things that come along with the home ownership. But you're still kind of, it's a low barrier entry, but you're dipping your toes into the investment side of it as well. So I'm a big fan of house hacking. Um, I think it's a great way for people to get started. And when you're, you know, starting out or, a little bit younger, whatever it may be, you're probably more willing to live with somebody on the other side of the wall, um, and kind of do that type of thing. Whereas, you get a little bit older, you might want that single family house that you can kind of just, live in for 20, 30, 40 years.
All right, so we got some people tuning in. So I want to say what's up to a lot. Thanks for a lot of people sticking around with us through the technical difficulties. But I do see Lynn, who was just recently featured on Bigger Pockets Rookie. So she's tuning in. So I also put her YouTube channel in the chat. So go please subscribe to her channel. But she has an amazing story. So also go check it out on Bigger Pockets. And Joel's here. Thanks for always tuning in, Joel. Joel has a bunch of social media pages. He's killing it. But I put his lending side YouTube channel down here, so go subscribe, check him out also. And there was a question though for you from Harrison. So Harrison is also working with Liam and Jeremy, the Taggart team. But Liam, do you feel like you had to change your view of the American dream from what you originally thought?
Interesting question. Yeah, I think I don't know. I'm 27, so I think by the time I became cognizant of all this stuff, it was after the '08 crisis and all these things. Um, so I I guess you could say I probably didn't have that picture of the classic American dream that everybody had growing up in earlier decades and stuff. Uh, it's I think it's the picket fence and the house on the hill or whatever. It's just changed over time. I kind of when I became cognizant of like investing and like what my life was going to look like, I kind of didn't expect that to be the case. And I think it's more on a personal basis of like, what are your goals in life? How do you see your life playing out? And then for me, it was like, all right, I want to be in real estate in general or be involved with it somehow. And house hacking, for example, was the best way for me to kind of get there and achieve my American dream, which is, financial independence and kind of freedom to travel or whatever it may be, take care of my wife and future kids and stuff like that. So it's an interesting question. I think it's like a given. It's like a fact where the American dream has sort of changed over time, um, and I think that's fine. It's just the market and everything has kind of shifted to a point where people have to think a little bit harder about what they want and then how they're going to achieve it.
A lot of great points. I wish Denzel was here. We could kind of get some takes on the Detroit market because I think
Mm.
Detroit and Pittsburgh a lot of times are popping up as two of the more affordable markets. I'd love to kind of compare the differences and the similarities of those markets. But I forgot. I don't know if you mentioned it, but you are originally from Buffalo, though, right? Or
Yeah, so I'm from a small town about 40 minutes south of Buffalo, New York, but that was like, the nearest metropolitan area we had. But I'm right across like the PA New York state line, like 30 minutes from Erie, PA, and about 35, 40, 50 minutes from Buffalo. Uh, but yeah, I'm from that general area, greater Buffalo area. Yep.
and how is the markets different from Buffalo to Pittsburgh?
So I mean, Buffalo is a big city. I think it has a lot more inventory. Um, when I was kind of growing up and then like through college and stuff, Buffalo, it wasn't as like attractive a place to live in my opinion. But I think over the past couple of years since I've left, probably since feels like probably like 2018, 2019, 2020, it feels like kind of a younger happening area where younger people are liking it there. There's some great neighborhoods and stuff like that. I know one of the podcast hosts on Real Estate Rookie lives and invests in Buffalo. Um, so, I mean, I like that market for sure. Uh, and I think you can get kind of similar vintage deals to Pittsburgh, but probably just more inventory, I would think. Um, Again, like certain sections of the city good for cash flow and great rental areas. Other sections you can kind of get your single family homes and stuff and decent appreciation. But yeah, I think over the past call it 5 years, it's gone more on my radar as I've learned more about real estate and stuff like that as a city that could make sense for a lot of people.
I see Josh Burdick is tuning in. He said he's sitting in urgent care right now for a cough. So rest up, boss man. And also, I did put Liam's Instagram page and their Team Taggart page. So go if you want to go follow them, go check them out on Instagram. And if you want to know more about Pittsburgh real estate, reach out to them. Like I said, they've been a great resource. And when available, they do try to pop in on Jack's Thursday calls. And also, like you were mentioning, the real estate rookie, and I actually saw. I was just watching one of the videos recently because I saw Lynn posted on her channel also, or
Hmm.
on her Instagram. But I saw you comment also about Tony should be looking at Pittsburgh as one of his markets
I
to
did
be
say that.
flipping.
Yeah.
Yeah,
Yeah. I
so
haven't
so
listened to their podcast in a while, but I listened to that one and I was like, oh, it's like perfect timing because he was talking about flipping. I just got my first flip under contract last weekend. So I was like, he should be looking here.
So Steven's here. He's in Canada. He's a new member to School Community, and he's asking, "Hey Liam, Mark, quick question: would you consider all cash purchase or financing a property would make more sense for a long-term buy and hold?"
At the beginning, I'm partial to financing and using leverage to your advantage. But it depends. Some people don't want the risk of having the mortgage on there, or they want the extra cash flow and they have the cash to put down, so they might want to pay something in all cash. But generally, if you're starting out, I think leverage is your friend as long as you do it in a smart way.
Hey guys.
How's it going?
All right, we got
Sorry,
Denzel here.
sorry I'm late
No,
joining the party. I had a meeting with my builder and it took 30 minutes over, so I totally apologize.
It's a good
no,
excuse at
you
least. Yeah.
you actually are almost pretty much right on time. We were having technical difficulties, so we've only
Oh,
been on
perfect.
from yeah.
Perfect. Perfect.
But quickly, it's been a while since you've been on, so maybe quickly fill the audience in where you're at and who you are. So I have put your Instagram channel or page on
Perfect.
the chat, so everyone go check him out. But yeah, fill my audience in.
Hey everyone, my name is Denzel Falk and I'm in Metro Detroit in Michigan. I'm a real estate broker. I will do a lot of work with the state first, buying different types of commercial properties, residential properties, things like that. I'm also a landlord as well, and I help people pass their real estate exam on the side. So I'm here to help, and I'm glad to be a part of today's show.
Yeah, so anyone thinking about getting their license, Denzel does have like a class, and he helps people all around the country pass their license. So go reach out to him if you are interested in that. And let's see. So this kind of was Denzel's topic. We have been talking about the rent versus buying, but maybe quickly, Denzel, you can maybe chime in quickly if you. So Steven is a new school member in the One Rent at a Time community. He's in Canada. He's been looking at Pittsburgh with Liam and Jeremy Taggart and whatnot. But he maybe you can answer this also for him. He says, "Quick question: would you consider all cash purchase or financing a property would make more sense for long term buy and hold?"
Great question. If you got the capital to buy cash, it's not a bad idea to do. I know a lot of investors that have all buy just like one of my, I guess, mentors. He all his properties he buy cash, and he just have the liquid capital to do so. But he's using it just strictly off to live off of. Obviously, it's harder to do that with cash flow for long term when you have leverage against it. But I'm not opposed to using leverage. I use leverage 20% down, owner financing, seller financing, things like that too. So it's honestly just about how good the deal is, right? If it's a place that, it got strong cash flow and maybe not as high as appreciation, maybe it makes sense to go cash where you know that the cash flow is strong, but properties just don't go up in value as much. But if you got a property that got a lot of appreciation to it, you can leverage that. Put 3.5% down for a duplex or multifamily or something like that, small multifamily or something like or single family, and you get a lot of appreciation in that area. It just may make sense to go ahead and get that leverage.
Awesome. So maybe also Denzel, now you can kind of touch on the topic of renting versus buying. So I'm sure you didn't hear kind of our takes. So maybe you can kind of give us your take on the idea of renting versus buying. Does it make sense?
It's honestly been a topic of discussion lately. I've been seeing a lot of different podcasters talk about it, a lot of different real estate gurus talking about it. It's been hot right now because the market is just crazy with far as interest rates, how hot, how expensive it is, property taxes obviously going up. So for even just for your average investor, should you go buy a duplex? You still put the 3.5% down and go about it that right way, or if you're looking to just buy single families and such like that, is it just better for you just to rent where you live and go ahead and buy? I mean, my personal opinion, I guess it just kind of depends, right? I feel like if you already have a single family and maybe you can get higher cash flow for the single family if you rent now because you had a lower interest rate when you first bought, it may make sense for you to maybe go to an apartment or rent a property and then go ahead and rent the property that you currently living in if you own it, or vice versa. If you're starting off and if you don't want to do the house hacking approach or that way, it may make sense to start off by going to get an apartment where you not have to pay in for maintenance and like home care, all those types of expenses, property taxes, homeowners insurance, and then go ahead and use that capital to go and invest too. So honestly, I'm either way right now. Yeah, it's just, and I'm an investor in that way, but obviously I already own property, so it's kind of already easier. But if I just starting off, it just depends on the numbers. That's where I'm at with it.
Yeah, and so like Liam is in Pittsburgh, so he's in another affordable market also. So
Yeah.
you are in a market that is very affordable. But is that getting right now, currently, is it still cheaper to buy in your area, or is it cheaper to rent? You would say.
I say right now is equivalently the same. Like I think rent, like it's hard to even find deals right now. But for the most part, I would say it's probably cheaper. It's about equal, right? I'm saying like if you want to live in a nice area here in Metro Detroit, you probably going to it's 1800 $1,800. That's what you probably getting for rent as well. It's not really a break even. It's really a lot of value add in my area, so it's kind of like even right now. So that's where we're kind of at with my area.
Yeah, I definitely think there's a lot of factors involved, but I think you have to. I think my point is always for most people, it makes more sense to rent if the spread is being used to invest in other things. And,
Exactly.
but that is the thing, right? For a lot of people, they may rent, but it's now they have income that can be used on other toys in a sense, right? So a lot of times I think, and to Liam's point, he touched on it earlier, right? Where it's kind of a forced savings account. So even though it may be more expensive to buy, it is kind of forcing you to build this long-term wealth where a lot of people, even if you rent and yes, you're going to save a lot more money, what are you doing with that extra money you're saving? So I think that is the biggest key to all of this. But before we move on to, I do want to, Denzel, I know it's been a while, like I said, and I remember you did have that fire at your
Yeah.
unit. Is that all taken care of, resolved, everything's
I'm
done?
still dealing with it. That's why I've been so busy, Mark. I haven't been dodging you. I'm in the process of rebuilding right now, and so it's been meetings with subcontractors, contractors. I was just in a meeting with a contractor at like 8:30 last night. And now my builder comes and he's had me there hostage until I think we started at like 10 and just ended up for an hour and a half. So, but it's coming along. But it is just, a lot of planning and like new development and new construction that I'm learning for like firsthand knowledge. I'm used to just obviously buying something, obviously almost turnkey or something, but for just to have that firsthand knowledge, just building from the ground up, it's been a big learning curve.
All right. So and like I think insurance was okay with that, or you found out a lot too, right? You said,
Yeah,
right?
yeah. So insurance, obviously, yeah, I was underinsured on it, so I'm coming out of pocket to finish the bill and such. But yeah, I learned a lot with this in the insurance process, how it works, how's your property being covered, what's being covered. Paying attention to those homeowners insurance policies, making sure you got enough replacement value, especially with inflation and all the different things that's going on with material and how expensive it is. You want to make sure that your property is covered fully before every year you need to be looking at it. Honestly, replacement costs.
I think I don't know if I've been on with you recently, but like Curtis, he's in the Washington area, but he sits down with a lot of investors, tries to pick their brains, like the Cody Davis method, and kind of
Yeah.
build that relationship. But Curtis has come across some investors with maybe 30, 40 unit portfolios, but they have theirs all paid off, and they don't put insurance on their properties.
Yeah,
And
I'm hearing that. Yeah. Yeah.
yeah, because they felt like insurances don't want to pay out if possible, so they're going to find any way not to. So basically, but that person, what they do, they self-insure. Basically, they're basically putting aside money from every rental income coming in as self-insuring these properties, so that if something does happen, now they'll just pay it on their own, and that way they don't have to worry about dealing with the insurance company and probably not even getting paid out, or like you said, you're learning a lot of these different things. What you thought you had coverage or a certain amount, and
Right.
then come to find
Yeah.
out.
Yeah, because for me, I told you so. I had I have a main house and I have a carriage house, and my insurance um, guy, he basically put that I lived in the main house, which I didn't. Never lived in the main house. I lived in the carriage house, and so they were trying to cover they were trying to cover the carriage house as a garage, right? So if anybody don't know what a carriage house is, basically like a detached ADU, right? So it was ADU in the back, and I lived in the back, and I rented my main house out. So at the end of the day, they were trying to cover it as a garage and not cover it. So they were only trying to give me like 30 grand to rebuild. I'm like, what are we doing? And then so I had to prove that I lived in the front because they wasn't going to cover me, right? So I had to prove. I had to prove that I lived in the back, not the front. I had to prove that I lived in the back, and it was just a headache and nightmare. I had all my tax transcripts and all my tax write-offs. I had to show my license and all different things of what my address said, bills and DTE bills and all that stuff. So I ended up proving it, but then they end up covering it, and then they wouldn't cover anymore. And then now, since I'm doing something different, they won't even give me like any code upgrades for like installation and like electrical, plumbing, siding materials. So I'm basically coming, like I said, out of pocket with this stuff. So you got to really pay attention to those homeowners insurance policies because they do not want to pay, and they will look for every reason not to give you any money. It's insane. They crooks and it's just really bad. They really are crooks.
Yeah. Flavio, oh no, I'll get to Flavio's one making trouble again. But Harrison says, looking back at 2020, would you all have rented and put all your money on stocks or stay with your plan on real estate?
I'll let you go.
I think I would have stayed with my plan. I mean, 2020, I got like a 2.98 interest rate on my first house hack. So, and I have a similar situation to you, Denzel. It's like I'm looking at my carriage house in the back, and I'm in the main house in the front.
Yeah.
But no, I mean, I would have stuck with the real estate side of things. I mean, that's what I like. That's what I understand. That's the way my brain works. You can touch it and feel it. So, you know, hindsight is 2020. Like you can always, look back and see how well the market has done or whatever. But, I kind of have bought into the real estate game already. And that's, I have belief that if I stay on this path and make good decisions, then, I'll end up where I want to. So,
Yeah, I'm gonna piggyback off that. I agree with you. I would have stayed to what I was doing in 2020. I started. I bought my house hack in 2021, and I got a 2.7 interest rate.
there
So
we go.
so you got that, and then with the house hack, you could just able to save up so much more money, so much more quickly, especially if you got the mindset and discipline to not spend it after you see more money coming in because you're not paying for a bigger house expense. And so it really accelerates things. It makes life a lot easier, I would have to say. So I think we started at a good time, and I don't regret that.
I think for me, well, this would go back to like 2015 when I bought my primary. I would have rented instead,
Mm,
but I would have bought something that made more sense as an investment. So, like my primary residence, I probably overextended myself. I mean, it's in a area that I grew up in, so but I could probably rent for a lot cheaper. Well, not considering what I got at it and the rates I got at it. So now I'd probably be renting for about renting for more than what my mortgage is now.
uh,
But I think if I was to rent from then and at that time instead of buy my primary and buy something in probably a lesser neighborhood in Hawaii, but I probably would have got like a small multi or something in Hawaii for that price. Um, it would have been a better investment type of return. Now that's looking in hindsight. So, but at the same time, like back to Liam's point of being like a forced savings account, and Hawaii does have solid appreciation, so it still has worked itself out. It's still fine. But if I just had a different mindset, I think I would be much further ahead, or my capital could have been used a lot better. And even in my situation, like where me and my son's mom split up and whatnot, right? So now I have this bigger home, which I don't necessarily need. So right now I am renting it out now, helping my parents out. So I'm kind of doing like a reverse house hack where I've
mm,
gone back to my parents to help them and basically drive them. They're getting old, so it's doctor's appointments every day and whatnot. So from that standpoint, it's worked itself out. But I think you just always got to be thinking a little bit differently, I guess, and have be able to create options out there.
I think there's definitely a case to like live where you want or rent where you want, and then invest where it makes sense. So like Jeremy and I have a client locally who has done, several deals. He's done a couple house hacks, two or three, but he just got engaged, and instead of buying a single family house, where maybe he wasn't quite ready to do that or financially it didn't make sense, he's renting in like a really nice apartment building with a bunch of amenities, but he's still doing deals like and investing on the side. He just happens to be renting, with a fiance who's maybe a little bit pickier about amenities and quality of living and stuff like that. There's definitely a case to be made where, rent or live where you want to, and then, invest the difference where it makes sense to do so.
I agree. I think as we sit here and talk about it, it really just kind of sounds like a mindset thing, right? It's different disciplines with each one that we do. Like if you decide to, again, stay in an apartment building, nice apartment building or so, and then invest that difference, you got to be able to do it, right? You got to have the mindset, the discipline to do it. But vice versa, if you house hack and you get an additional money, you can't go out there and spend it too. You have to also go ahead and reinvest it and put it back into the business that you're trying to create for yourself. So it's no right way to do it. It's just about really just having that mindset to know, have that discipline to know where you're putting that money at once you're getting it. Either way.
Flavio, who likes to make trouble here, and
I seen that.
Denzel actually, like I forgot to tell Denzel his reel talking about Detroit one time. The last time on our live before was one of my most viewed reels out there, talking about possibly the Detroit area, and is it the hood kind of thing.
Yeah.
But Flavio wants to know, Denzel, had you had some experience that makes you think that you would need a vest to invest in Detroit? Because for some reason, Liam,
Yeah, I
Flavio
know.
thinks you need a vest in Pittsburgh.
Invest, yeah.
No, you don't need a Vesta in Detroit. I mean, obviously it's areas, but honestly, I've been in a lot of different cities where areas is the area. I mean, you can go to any metro city, and it's gonna be cities where you just probably streets you don't go to, you don't go around. But I know I never had any issue. I think the main thing you get in Detroit, and that's why I'm in Metro Detroit. Obviously, cities around Metro, the city of Detroit, but I'm very like 5 minutes away from Detroit. But what I will say is that when it comes to like long term rentals investing, a lot of investors they complain about obviously their stuff getting stolen, right? Tools, hot water tanks, furnaces, AC condensers in the backyard. These are like things that scrap metal, they things like that. uh for people that's looking for long term, flips and stuff. I hear a lot of investors complain about that, but I usually stick to like Metro Detroit areas, city around in areas around there to when I'm investing like long term rentals. I just want to make sure I'm getting the best tenant pool. I'm getting the highest rent that I'm trying to get for it. It's pretty affordable here still. But no, I don't think you need a vest. I never had to wear a vest or anything. That's funny. That's
That,
hilarious.
no, don't mind Flavio. He's just upset because he ordered a ORAT shirt from Frank. So here's the PayPal link for the shirt that Frank. No, so Frank is selling the shirts for the Vegas event to donate money to the Blind Center where the event's at. But he's just mad because when Flavio showed me the shirt, I said, "Hey, how come you ordered the girls one?" So he thought I was he thought I was being serious, and he like called Frank and like, "Hey, I got this." But anyway, so he
Right.
yeah. But Flavio's a good guy. So he's in Grandview, Washington. So
Oh,
I think he's pondering the idea of investing out of state now because his area is getting priced out. He said, but we'll see. Let's see who else is here. Lynn, yeah, Lynn says I'm lying because I was making a joke that since Lynn has appeared on Bigger Pockets, she never returns my calls anymore. Um, but but a lot of uncertainty in the economy right now. Tariff talks and inflation and whatnot. Do you folks see that as maybe a better reason for people to be renting right now, not committing to this 30-year mortgage and with so much uncertainty out there? What you guys thought? Maybe Liam, you can go first.
I don't think so. I mean, I've had that question come up with clients a few times so far, and they're like, have you seen tariffs hit construction prices or whatever it may be? Yeah, I'm like, I really haven't seen anything yet. I haven't seen contractors mentioning that or quotes going through the roof or anything like that. I think people tend to get worked up over news in the short term, but over the long term, things will kind of play themselves out, and we'll look back and be like, oh, it was kind of a period of high uncertainty, but we're kind of going to revert back to a mean at some point. So I wouldn't be making any major decisions, yes or no, on things based on tariff conversations, for example.
Denzel, any thoughts on that?
Same here. For me personally, when it comes to investing, I don't pay attention to any sort of news of like anything. Like I'm in my like I feel like I'm in my own lane. I'm really just paying attention to the spread, right? Does the numbers make sense? Can I make this investment? Can I afford to make this investment? Can I handle another payment? I'm not really looking at tariffs or anything like that. I feel like once you start getting into that rabbit hole, you start to just look at that crystal ball to be like, oh, is this something that you know it's going to be like this in like 5 years, or it's going to be like this in 5 years, or it's going to be like this in 2 years. Just make the investment, put the down payment down, and then go
Yeah.
as you can handle it, because it's going to change, right? And I try not to let political, uh, imposes or anything like that. Besides interest rates, right? But even with that, I still invest high interest rate, low interest rate. As long as the numbers make sense. So I don't try to
Yeah.
look
I
at
think people get themselves into trouble a little bit. I think when they pontificate or speculate about what may or may not happen, if you
Mhm.
kind of just analyze the deal and make good decisions with the information you have, you're kind of good. I think I would put it under the analysis paralysis bucket.
Yeah,
If you're kind of speculating about how things are going to play out on a macroeconomic level, I would
yeah,
just focus in your backyard, focus on the deals you're looking at, talk to good people like Denzel or me or Jeremy or Mark or whatever.
yep.
Uh, get as much information you need to make a decision, but try not to speculate about things that may or may not happen over a 5 to 10 to 20 year period or whatever.
Exactly. And for the most part, I always seen it where it always works out. I mean, tariffs high, things expensive. Well, great. I bought something in a time where it was huge, like where it was, if it was a good deal and you found it in a good, not depending on the economy. I mean, if it goes up or it goes down, if it goes up, great. It's great for you if the deal worked with the current economy. And if it goes down, I mean, if you got it at a good rate and the cash flowed or anything like that, then you're still gonna be in good shape. I mean, rents is not decreasing, so I mean, I wouldn't be too worried about anything like that.
Yeah, Josh Burdick says, I'm just watching days on market slowly climbing, waiting for my great deal. Yeah.
Yep.
Harsh Reality says, anytime you rent or buy, it's more about what you buy. Yeah. And then L, I don't know how you pronounce this, but looks like they're here to make trouble. But thanks for tuning in. Just subscribe at least if you're going to come here to make trouble. L. I don't know, but thanks for tuning in, man. But yeah, I think the biggest thing is all of us being agents. I mean, what is your guys' take? I see it quite a bit, on social media when certain agents out there are always posting those reels or whatnot about you throwing money away by renting. Like, do you guys have a thought or opinion on that? So maybe Denzel, you can go first on that.
Yeah, I mean, it's truth to it, right? I mean, you technically are, not using the money to, do any. I mean, you got that savings bank as a primary home or an investment home, so yeah, you're making that payment, and it is for long term growth. Obviously, after that 30-year mortgage and the appreciation you get out of it. But I also feel like when it comes to agents too, they look, obviously we agents, we're trying to sell something, all right? So it's really about, what is good for my client, and that's what I kind of look for, right? If my client's not ready to purchase a home or don't have the savings or reserves to buy a home, then no, you probably it's not good for you if you not able to take care of a lawn or do anything, if you probably not should be good for you. But at the end of the day, uh, if you are ready to buy a house and you do have the reserves and you are able to own a home and take care of the home properly, then yeah, I always say I would always go for like buying over renting in a manner of like that. But there's a lot of people nowadays, especially millennials, we like to travel, we like to be in different places. So maybe not owning a home probably would not be best for that person or so if they're not going to take care of it properly.
Yeah,
What
I
about
would
you, Liam?
agree.
Yeah.
I think when compared to owning a home, yeah, technically renting is kind of throwing your money away a little bit. I mean, you're not really benefiting from those payments you're making every month, other than obviously, your living situation or some extra amenities you're getting. But kind of just with everything else, don't live above your means. If you're making otherwise good decisions with the money you have, other than your rent payments, like maybe you're investing in the stock market or the real estate market, some other investment properties or whatever, then I think that's totally fine. I mean, one person's standard of living is going to be higher than another person's. If you want the amenities and the nice building, or just want to rent because that makes sense for your particular financial foundation, or where your kids are going to school or whatever it may be, then that's fine. And I'm not going to knock that and say that's throwing money away. I think there's a case to be made on either side, but it depends on the person. As long as you're not living above your means, then I'm not going to knock anybody for renting at all.
Yeah, I used to like when I first started and bought my first house back, and I kind of still got that mind frame where I wouldn't even buy a primary home if I couldn't make money off of it. Just kind of one of my things. Like and I still feel that way to this day. And I like I'm kind of upset now. So with the fire, right? We had new zoning. They have implemented literally like 2 months after, or I think the same year of fire. So like in December, well, my property was grandfathered in as a multifamily property, but now it's considered an ADU, right? It's not considered a carriage house. So with the new laws and ADU, they are now requiring me to be owner occupied. So now it kind of changed things for me. Well, I'm still able to rent it out, but I'm not. But it has to be owner occupied. I'm not able to um, leave and then rent the back out and rent the front out since it's considered an ADU. Now I'm not able to do that. So it's kind of put where I would have bought another multifamily and then rented both of these units out. Now I'm not able to do so. So now kind of changed my strategic plan of how I'm investing and such. So, again, it's nothing wrong with renting. I guess if you're using the money like to get investing in stocks, the stock market, or you're buying rentals, or you're still trying to invest in real estate in some manner. But for the most part, I just I can't just imagine just living in the property and not making any money off of it. That's just how I
Yeah.
feel.
I think that's
Yeah.
how our brain works. Like on this call, we're clearly like, I'm not buying a property unless I have some upside on it. Like that's
Yeah.
just how we function on and how our brain works. But there's a lot of people out there who's like they might not care to do that. They're more worried about, you know, their living situation and kind of having the maintenance and things taken care of. They don't want the kind
Yeah.
of mental capacity taken up by that type of stuff. And that's totally fine. I think everybody's different. It's just on this call, us here are probably biased more towards the I need some upside on whatever payment
Yeah.
I'm making every month.
Yeah.
Yeah, Josh agrees. I think it's better own than rent. Just bring in roommates to lower your costs. So that is one option. But let's get to Steven's question. So Steven said thoughts on ARM products first, 30-year fix. What would be ideal right now? With interest rates currently pretty high, what's your thoughts? So maybe Liam, you can start off with that.
Yeah, I mean, Jeremy's good for this because he's like a savant with all the lending stuff.
Mhm.
I mean, I don't have a ton of experience with the arms, but I can tell you I have had more clients looking into those in the last year or so. I've been seeing those conversations had a little bit more often. Um, but yeah, I couldn't give you any real specific details on them, but it seems like there's some decent loan products out there for those now. Just make sure you connect with like a really good lender who's going to look out for you and stuff, and talk through all those options and like the pros and cons of each one. But there's definitely a case to be made for them now, from my understanding.
Yeah. Same here. I'm not even haven't really dealt with arms too much. I'm kind of like anti-arm, so I'll probably be like the wrong person to like ask about that. But I know if I would say if the person is very informed of the market, will pay attention and watches it, and that's and is good at trying to see where it's going as far as interest rates, and if you into it, then I would say arms wouldn't be a bad thing. But for me, I like to just know my payment is not going to grow. I like to see it fixed. So I'm more just 30-year fixed all the time. And then I'll just refinance, if interest rates drop and call it a day from there.
I think the one thing with arms is they're a lot different than maybe 2008. The one thing I would say, Stephen, is a lot of times it depends on your journey. Of course, you want the 30-year fix if you can, but the arms, there is a lot of them that you still would be qualified on the higher rate. So whatever the rate will be after whatever the intro period might be, you're going to be qualified on that higher rate. So that somewhat alleviates some of the risk because at least you're being qualified at that higher payment. So that is something to consider. So just make sure that, whatever the higher rate might be, that, you're able to afford that payment or that cost on the property. But if you can get a 30-year fix, that's ideal, right? Flavio says, on your rental contracts, you guys prohibit pools. Morning, myself, tenant call me if he can install a Walmart pool. Thanks, guys. I think he's just kind of asking as far as liability. Do you guys allow pools and whatnot in your guys' properties
I've
or
never had it
rentals?
come up, but I would imagine there are some insurance implications. So depends. I guess if it's like a single family where the tenant's been there a while and they kind of, take ownership in the property and stuff like that, uh, I'd maybe be okay with that, or maybe I'd structure something where if it's like, hey, if there's like a major increase in the insurance premium because you have a pool on the property, maybe you pay that difference or something like that. You're welcome to have it, but you have to pay that difference. I mean, I would imagine there's some insurance implications.
Yeah, it's definitely some insurance implications, and I wouldn't recommend it. I'm not, you know, I try to run my rentals very clean, right? You know, and rules laid out, but pools definitely not. I mean, it's just too much implication. I mean, if you have, let's say, kids is walking by, they want to jump in the pool because it's a 90-degree day and something happened to them, slip or fall, drown. I know it was a lady. I forgot how long ago it was that she ended up having a pool. Um, and the kids was leaving school. It was a half a day. End up jumping. One of the kids jumped on the fence. Jumped on the fence. It was a prank, or like they betted him to do it. Jumped in the pool. He drowned. She was found liable for that. So I just regret. I wouldn't stay away from pools. I'm actually starting to get away from having pets, even though it's kind of like one of those things that you can't get rid of. I just dealt with a tenant recently, and I was busy with that, Mark. With she had two cats, and she ended up like a month into the lease. She said, "Can she have a she had a someone was giving up a golden retriever, which is their lovely dog." So I'm like, "Yeah, that's fine." It was a puppy, so she let her have that. And then the boyfriend ended up moving out, and then she ended up moving another guy in. He had a dog. Those dogs had puppies. And then so she ended up leaving the house, right? And I come in there and I'm getting bit by something and I'm like, what is this? What is going on? Well, it had a flea infestation. So I was dealing with that for like 2.5 months. Like I couldn't even rent it out. I lost rental. I was lost rent income. I'm paying a mortgage on this for 2.5 months without be able to get a tenant in there and dealing with a flea infestation. And I know it's hard to really regulate those things unless you watch them. But like all the neighbors usually know me in the area. They know I'm there. They usually call me to know like if your tenant is having animals. I know I kind of changed the subject too, but it was just one of those things I was just dealing with. Where it was just a lot to deal with and try to get rid of fleas. I don't know if anybody ever dealt with fleas, but they're not easy to get rid of whatsoever. They're
I've
pretty.
never had them in my properties, but there's been a few properties I've walked that are like value add deals where I leave and I'm like, they're all over my legs and stuff like
Yeah,
that. They're in my car now. I was like, yeah,
yes,
it's the whole thing. It's not
yes,
fun.
and
It's
I had
always
to
the
do that.
properties with carpet too. It's like fixer uppers with a bunch of carpet. They always got the
What
fleas.
my
It's the
property
worst.
didn't have my property did not even have carpet. It
It's
was all
crazy.
laminate hardwood floor, and I didn't even realize it. And mind you, I'm on the ground, I'm working, I'm doing repairs on the house myself, and I didn't even realize. And I kept going home. I was talking to my wife, and I'm like, I'm getting bit by something. I don't know what it is. And this was like March, February in Metro Detroit. So the weather wasn't mosquito weather or anything. It's pretty like 40, 50 degrees outside, 30 degrees on some days. So I'm like, what is biting me? And then I went there and I started looking at my leg and I'm like, there they go. And it took me forever to get rid of them. And I didn't even have carpet. I had 2.5 months to get rid of them. Wouldn't recommend it. So now I'm thinking about next lease, no pets. No pets. Can't do it.
Oh, Joe. So most of the people are agree. No pools for me. So Josh, Jovi, Harsh reality of fire says, yeah, I don't allow this in my leases, no pools. Josh also does say too much uncertainty for me to mess with adjustable rates, long-term fixed rates for the win. Casey says smoke the units. And hey, Max has appeared here 2 days in a row, and he is right on time for himself. He's usually about an hour late to things. So, but thanks, Max. Thanks, Max, for tuning in, man. Thanks for joining us again. I'm sure Joe's gonna give you shit also for tuning in now. But yeah, me also. I agree. No pet. I mean, no pools. Yeah, definitely too much liability. Just no real benefit to having them. I guess right. There's no reason. Does it make the property rent better or increase the
No.
rent for me? Steven, so this is a different Steven. So this is Steven who's in Pittsburgh. Uh, he's house hacking. He moved from Orlando. And Dion Talk is tuning in. So he said, my tenants can have pools if they fill them with liberal tears. Or, well,
That's hilarious.
it would be. But Dion, unfortunately, yeah, you weren't able to make the Three Amigo call on Sunday with Zuber. So hopefully everything is okay on that front. I know you had a family emergency, so hopefully that's okay. Hopefully you still have your live going on today at, I believe yours starts at 4 p.m. Pacific, I believe. If I'm wrong, correct me, but somewhere around that time. But everyone knows Dion, so that's a different story. But Grumpy Contractors here, so thanks for tuning in. He just got a foreclosure deal in California, but he's also been looking at the Pittsburgh market if it makes sense for him. So he wants to do kind of a full gut rehab or even ground up builds to kind of get around the older homes in Pittsburgh. So he is kind of considering that. So I know he's been talking with Jeremy and Alex. But oh, Jim, yeah, Liam's met Jim on the
Mhm.
Thursday calls also. Um, yeah, now Max, thanks for tuning in, man. I know you're busy, but we just got to give you shit. Don't worry about it, man. Um, what is the kind of, let's say maybe Denzel, you can go first. What would be the biggest misconception someone has about the Detroit real estate market? You would say.
Honestly, that it's not safe, and that that it's like shit homes there. In reality, it's a really a lot of upside, and there's a lot of beautiful areas in Detroit and Metro Detroit that you can obviously flip, invest, and rent and get solid good tenants. I think we just got a bad rep for what we've been having to deal with over the last past decade. But it's definitely on the up and up, and it's a lot of opportunity in the city. We got new developments coming every single weekend, and it's new buildings, new hotels are coming, like 4 or 5 star hotels, restaurants. We've been getting a lot. So if anybody's looking in Metro Detroit, please reach out because it's definitely some big upside in Detroit, like for sure.
Too bad your football team is going to be on the downside, though. But that's.
Uh, yeah, remind me, but I rather at least we had a winning season, so I'm happy about that.
All right. So Liam, so what about you? What would be the biggest misconception someone has about the Pittsburgh real estate market?
Yeah, I think for Pittsburgh, it's people maybe think of it as like they're, boring city, like there's not much to do there type of thing. Like it doesn't come to the top of people's list when it's like, oh, like I want to live in Pittsburgh.
Hmm.
So I think people get hung up on that when it's like, areas around the city where you're looking for rentals and stuff. It's like, who's going to live here type of thing.
Yeah,
But, there's a bunch of job hubs in, downtown Pittsburgh. We're also around Pittsburgh, like Cranberry and Robinson, where there's, good jobs. People want to live there. It's easy to get around and stuff like that. So I don't know. I'd say that's probably one thing. And then also just with the vintage, like the age of the properties that we have, there's a lot of stuff that comes up with that, whether it's basements, or if something's built in 1920 or earlier. People get real worried about that if they're reaching out from out of state. But it's kind of just how the market is. There's just certain other things you need to look at when you're walking those properties.
yeah.
Whether it's the wiring or the foundation, you really got to check on those things if you're looking at that age of a property. But people from out of state sometimes do get hung up on that as well.
Flavio says, Denzel, next time you have a infested house, go to a local pesticide store. They have good stuff.
Yeah, I actually did that too. I ended up buying my own stuff because I ended up paying like three times for exterminator, and I was like, all right, this is getting expensive. So I ended up just buying my own stuff and just doing it myself, and it was actually more sufficient because I actually covered everything I needed to cover.
Steven says, I've been in downtown Dearborn, Michigan. It's actually very nice
Oh,
down there.
yeah. Oh, it's all Dearborn is really nice. It's really nice. A lot of businesses, uh, a lot of different. They got different type of peace parks that they just starting to open up over there too. Yeah, Dearborn is really nice. Yeah.
And then we got Raider tuning in from Tel Aviv, Israel. So thanks for tuning in. Don't forget to subscribe and like before you leave. Jim says every area has their good and bad parts of town. Just need to find the best fit for your system. And
Mhm.
like we kind of touched on earlier, Liam kind of hopefully trying to round up Tony Robinson on Bigger Pockets rookie about flipping in Pittsburgh because he is looking for a new market because I believe his most recent one, he tried to flip something in California and he was kind of like, just the numbers don't make sense. I'm taking all this risk and not as much upside as he would hope. So I think he even mentioned Gary, Indiana, because he remembers talking to Lynn, who was also earlier here on the in the live, but. Lynn mentioned Gary, Indiana on her episode with Bigger Pockets rookie. So he even said, yeah, he's looking at Gary, Indiana, see if the numbers work.
Yeah,
Let's
and the
see.
reason I commented that, Mark, is because he mentioned like $100,000 purchase price and a $50,000 rehab. I was like, that's picture for
Oh,
perfect for
you need to look
Pittsburgh.
at Metro Detroit too. Then,
Yeah, there you go.
yeah, that you can. I was just about to say that you definitely can get properties for 100K and put
Yeah,
50K. Yeah, rehab for sure.
because it is true. Like if you're looking, it is less risk and kind of you have lower stakes if it's generally a lower priced flip. So if you're he kind of said that he was looking to get his feet wet again and get the confidence he needed to. And when you're buying $100,000 property, the stakes are lower than if it's a $300,000
Yeah,
purchase price and you're trying to flip that. So there's
yeah,
and these tier two, tier three cities like Pittsburgh, like Detroit, uh, they're on the upside. They're a good market, and you can find good flipper opportunities here, but the stakes are lower. Profit thresholds and profit margins are probably similar to what he's going to find, anyways.
and yeah, and what I would say to that too is though, like especially like in obviously some areas and neighborhoods in Detroit, but what I would say is that people definitely want something nice, right? They want something flipped, updated. They don't have to put a lot of work in. They're sick of the old style homes, as far as the internal layouts and stuff like that. So if you do come here, or if you do go to Gary, Indiana to flip, definitely those people are looking for housing. They want to live in a city. I got I got clients that do not want to be in a suburban area. They want to be in a city, but we're looking for stuff that's updated. It's usually most of my clients they buy in flips from different investors and stuff like that. So there's definitely a lot of opportunity there. So I don't think he would have to hold on to it long too for holding costs as far as if he's looking to do a flip and he's trying to sell something.
Harsh Reality says, when I think of Detroit, Barry Sanders is what pops in my mind. Before we get to Lynn's question, this is off topic, but Denzel, would you say Barry Sanders or Megatron was
Uh,
a greater player?
uh, uh, I like Barry Sanders. So Megatron was amazing too, though. So I don't know. We just never won anything with neither of them. But yeah, definitely Barry Sanders for sure, for sure.
All right. Lynn says, what is the average days on market? Pittsburgh or Detroit? Or yeah, okay. So
And
wants to go? Liam, you
I
go first then.
Yeah, sure. I think that's a good question. So in general, days on market has been creeping up. Like there's a bit more inventory now. So across the whole market, we're seeing higher days on market. So that's something to expect. But I think there's things you can do on the property level that, make it higher than average. If there's other properties in that area that are also listed, like do things in a way where you could, when you look at both of them side by side, there's certain things better about your property, and that'll help decrease days on market when you're trying to sell it. And also, it's based on neighborhoods. So like the higher end neighborhoods where there's not as much trading, on an annual basis, those will have much lower days on market. So if I'm thinking about a flip, like I actually prioritize, like that's a big decision maker and factor for me is what's the average days on market for this particular neighborhood? Because I want things to sell quickly. I don't want to, you know, stress about something being on the market for a month, 2 months, 3 months on the back end of a flip. So I'll go higher on price if I need to make sure I'm in a area that has generally a lower days on market. There are other areas where it still makes sense. It's just you might expect a little bit higher of days on market if you're in more of like a C class neighborhood type of thing. So it depends. It's more on the neighborhood level, but that is something to think about when we're looking at like these deals for clients, and also just the quality of rehab that you do, and you know the product that you're bringing to market will all affect days on market.
Yeah, same. I would say depends on the neighborhood. Detroit usually houses depends on Detroit have a couple different nice neighborhoods, but for the average, I would say between anywhere from 30 to 45 days right now for Detroit, which is
About the
kind of,
same.
yeah, and
Yeah.
it's like one of those things where, you got people that want to stay in the city, you got people that don't want to stay in the city. So it's kind of give you that middle ground, but I would say anywhere from 30 to 45 days. And like the B class neighborhoods, probably that's like that sweet spot. I say anywhere from like 200 to 300, right? Where, flips generally make a lot of sense. There's a lot of upside. If you can find a house you can get one for like 190, 195, you can get a really good flip off that 200. In those areas is really, I mean, that price range is really good to do flips. And that's going to be like in your metro Detroit areas, suburban areas. Because, you got, again, these are usually professionals, people who got careers or, you know, workers that's working, looking to move new families, 3 bedrooms, 1 bathroom ranches, things like that. But obviously, there's a lot of things, like you said, you can do to decrease that days on market. As far as like pictures, is obviously I can't say a lot about people like landscape, especially in the summertime. You know, so many houses I've been to where the grass is not cut. It's not, it's no flowers outside. That all that stuff like really pays a big picture. And like when people come to see your house, what's making it stand out from the rest of them. That's not making it look like that. And I
Hmm.
hate when you go to a house and the pictures do not look like how it looks when you get there. You're like, oh, this is gonna be great, and then you're like, okay, I see why it was listed for this much. So it's like,
Happens all the time. Yeah.
yeah, I'd rather
All
the
right.
house look exactly how it looks before it looking totally different.
All right, before we get to Dion's question, I want to remind everyone, go please subscribe and follow Denzel, Liam. So their Instagram pages are in the chat. So you got Liam's page, also his page with Team Taggart, Denzel's page, and also there's Lynn's YouTube channel. I know Lynn is still here, so go subscribe to her YouTube channel, please, and help get her subscriber count up. And also Joe Farrell's Lending Entrepreneur YouTube page, his new one, his new YouTube channel. He's starting a separate one from his podcast channel, so go check it out, please. But Dion says, have you ever flipped a property and after wish you kept it as a rental?
So I just got my first flip under contract over the weekend. So personally, no. But I do hear people mention that a lot. Again, hindsight is 2020 though, so you can look back in a couple of years and be like, oh, that property value has gone up so much. I wish I would have just held on to it. Uh, but for me, I mean, I default towards long term rentals. Like that's what I like doing. I don't want to make a full time job out of flipping. I'll do them opportunistically when a good one comes up. But I would say if the rent to price ratio makes sense on the back end for rental, I would keep that property. That's generally for us. It's like ARV is maybe like under 200,000, or if you're in a nicer neighborhood and rents are quite high there, maybe 225, 250.
Yeah,
If ARV is kind of below that level, it might make sense as a rental, and I would keep that because I default towards long term holds. But some people, they just want to get rid of a property, get it off their books, take their profit, and go on to the next one, and that's fine as well. But for me, it's probably dictated a lot around what's the ARV, what's the rent to price ratio on the back end, and kind of go from there.
yeah, same here. I kind of default to a long-term rental, so I don't really look into flips. It'd be something I stumble upon as far as like if you buy a property and then it's like I had it for 2 to 3 years or something like that, and then I'm like, okay, this will be a good flip because the neighborhood is turning green. Then yeah, that'd be something I would look into. But for the most part, I just look at long term rentals. I'm not really looking to do the flipping and things like that, paying all the capital gains tax, seeing how much I need to do for that. But it just got to make sense. Like again, and it's gonna be usually a long term rental first before it turns into any flips. It'd be down the line. But I'm just looking about acquiring.
Yeah, I think it really comes down to like what your business model is. So even like us, from the agent side, right? I see a lot of agents that do a lot of transactions, but they're not building long-term wealth because they're not acquiring rentals. And so yes, they're making the good income from the transaction side, but it's something that they're going to have to continue to do because they're not building
Yeah,
the passive income or continuous income stream from the rental side. So I think the flipping side. So even like one of the biggest flippers in Hawaii, they use that income to kind of fund their business or grow in that sense and generate income that way. But they acquire out of state rentals for the tax perspective, like you're saying. Like
mm,
they're doing the flipping to increase their returns quicker, but they're using their long term rental side for the tax benefits, and
that makes
that's
sense.
their business model. Yeah.
Yeah, it can be really good. Flipping can be really good for just cash inlays, and kind of gas on the fire to get things rolling. And there's definitely a time where that should be a priority for you if you're kind of building and you need those large cash kind of boosts. But yeah, generally, at least have a couple rentals if you're going to do a bunch of flips so you can get the write offs. Like
Yeah, I think, you mentioned the agent side of it. I think that's where I'm at. Like, I don't really need to flip because I feel like, again, the commissions and how they come, that's kind of like my flipping thing. You know what I mean? Like because again,
that's the
just
active
making,
income for
yeah,
you.
that's the
Yeah.
active income. So if I'm, making 15, 20 grand off for a couple of transactions, then I mean that's my big pot right there. I'm able to go ahead
Hmm.
and put that into real estate investing and whatever like that. I don't really need to do the flipping part yet. I'm not saying I won't ever get to it, but just one of those things that again, like if I hold on to it for 2 to 3 years, that's when I probably start considering it if the neighborhood is really good. And then I'm still going to buy another property that's basically, going to be another long term rental at that point too.
All right. I don't want to take up too much of your guys' time today. I know we got a little late start with some technical difficulties, but glad we were able to figure things out. I think this was a good one. Just remind everyone if you are interested in getting your license, reach out to Denzel. He can help you pass the exam. And like I said, if you're interested in investing out of state and you're thinking about Pittsburgh or Detroit, reach out to these fellas. They're doing a lot of good things out there. And also, like I said, Dion's live. I think it's 4 p.m. Pacific. So, but everyone should be familiar with that. So, don't forget about Dion's live today, and we'll get you guys on again. But thanks everyone for sticking around.
Thank you. Thank you.
Thanks, guys. Appreciate it.